Hi, everyone, and welcome back to English Speak. Learn to speak English. I'm Lauren, and I'm so excited you're here with us today.
And I'm Ethan. Hey everyone, it's great to have you listening today. Lauren, I have to say, I'm really excited about today's topic.
Oh, me too. Today, we're talking about something that every newcomer to Canada needs to know about: opening a bank account.
Right, and I know this can feel really confusing when you first arrive in a new country.
Absolutely. Banking vocabulary is so important. And honestly, even the banking culture can be different from what you're used to back home.
Exactly, but don't worry, we're going to explain everything simply and clearly. By the end of this episode, you'll feel much more confident walking into any Canadian bank.
So let's start with the basics, Ethan. When someone wants to open their first bank account in Canada, what do they need to bring?
Great question. First, you need identification. That's your ID. Usually, this means your passport or your Canadian driver's license if you have one.
Right.
Second, you need proof of address. This could be a rental agreement, a utility bill with your name on it, or any official mail that shows you live at your current address.
That makes sense. And what about the SIN number? I know a lot of our listeners ask about this.
Yes, SIN. That stands for Social Insurance Number. It's like a social security number in other countries. You get this from the government, and banks usually want to see it. But here's the good news. Some banks will let you open an account without it if you just arrived in Canada.
Oh, that's helpful to know. Now, do you need to make an appointment or can you just walk in?
Well, you can often just walk in for simple things, but I always recommend booking an appointment. You can call the bank and say, "I'd like to book an appointment to open a bank account, please."
Perfect. That's such a useful phrase. And then when you get there, you'll usually talk to a bank teller or a customer service representative.
Exactly. A bank teller is the person who helps customers at the bank. They're usually very friendly and patient with newcomers.
Now, let's talk about the types of accounts. Ethan, can you explain the difference between a checking account and a savings account?
Sure. First, notice we say checking. Chequing, not checking like in American English. A checking account is for your daily money needs. You use it to pay bills, buy groceries, get cash from ATMs.
Right, that's your everyday account.
Exactly. And a savings account is where you keep money that you want to save, money you don't need to use right away. Usually, savings accounts give you a little bit of interest.
Interest, that's extra money the bank pays you for keeping your money there, like a small reward.
Perfect explanation. Most people start with a checking account because that's what you need for daily life in Canada.
Now, before we talk about cards and fees, I think we should discuss something really important: the different types of banks in Canada. Ethan, not all banks are the same, are they?
Oh, absolutely not. This is something that can be really confusing for newcomers. In Canada, we have several different types of banking options, and each has its own advantages and disadvantages.
Let's start with the biggest ones, what we call the Big Four or Big Five Canadian banks.
Right. The big four are TD, that's Toronto Dominion Bank, RBC, Royal Bank of Canada, BMO, Bank of Montreal, and CIBC, Canadian Imperial Bank of Commerce. Some people also include Scotiabank as the fifth big one.
These are the largest banks in Canada. What does that mean for someone opening their first account?
Well, the biggest advantage is convenience. These banks have branches and ATMs everywhere across Canada. If you move from Vancouver to Toronto or from Toronto to Calgary, you'll find your bank there.
That's really important, especially if you're not sure where you might end up living permanently.
Exactly. They also have the most ATMs, so you're less likely to pay those $3 fees we mentioned earlier. And they usually have good online banking and mobile apps.
But there are some disadvantages too, right?
Yes, unfortunately. The big banks often have higher fees. Those monthly account fees we talked about, they might be $15 to $20 per month at a big bank, compared to maybe $10 at smaller institutions.
And sometimes the customer service can feel less personal because they have so many customers.
Right, so what are the alternatives? Well, the second option is credit unions.
Credit unions. Can you explain what those are? They might be unfamiliar to some of our listeners.
Sure, credit unions are different from regular banks because they're member-owned and nonprofit. That means they're owned by their customers, not by shareholders who want to make money.
So they're more like a cooperative?
Exactly. And because they don't need to make big profits for shareholders, they often have lower fees and better interest rates. For example, Van City in Vancouver is really popular, or Desjardins in Quebec.
And the customer service?
Often much more personal. Because they're smaller and community focused, the staff might actually get to know you. They're often more willing to work with newcomers who don't have established credit history yet.
That sounds great, but I'm guessing there are some trade-offs?
Yes, there are. Credit unions usually have fewer branches and ATMs. If you travel a lot or move frequently, this could be inconvenient, and their online banking might not be as advanced as the big banks.
Also, some credit unions are regional, right? So you might only be able to join if you live or work in a certain area.
Exactly. You need to check their membership requirements, but many are quite open. You might just need to live in the province or make a small donation to a community organization.
Now, there's a third option that's becoming really popular, especially with younger people: online-only banks.
Oh, yes, these are banks that exist only on the internet, no physical branches at all. Examples include EQ Bank, Neobank, and even some services from companies like Kudo Financial.
What's the main advantage of online-only banks?
The biggest advantage is no monthly fees. Because they don't have expensive bank branches to maintain, they can offer free checking accounts. And they often pay much higher interest on savings accounts too.
That sounds amazing. What's the catch?
Well, the biggest disadvantage is obvious: no physical branches. If you like talking to a person face to face, or if you need to deposit cash regularly, this could be a problem.
Right, and if you're not comfortable with technology, doing everything through an app or website might feel scary.
Exactly. Online banks are perfect for tech-savvy people who do most of their banking online anyway. But if you prefer traditional banking, they might not be the best choice.
What about ATMs with online banks?
Good question. Most online banks partner with ATM networks, so you can use certain ATMs for free. Some even reimburse you for ATM fees at other banks, but you need to check which ATMs are free before you sign up.
So let me summarize the three main options: big banks for convenience and lots of locations, credit unions for lower fees and personal service, and online banks for no monthly fees and high interest rates.
Perfect summary. And here's a tip for newcomers. You don't have to stick with your first choice forever. Many people start with a big bank for convenience, then switch to a credit union or online bank once they're more comfortable with Canadian banking.
That's great advice. Now, once you've chosen a bank and opened your account, let's talk about cards. This is where it can get confusing: debit cards versus credit cards. Ethan, what's the difference?
Great question. A debit card uses your own money, the money that's already in your checking account. When you buy something with your debit card, the money comes directly out of your account immediately.
So it's like electronic cash, basically.
Exactly. But a credit card is different. With a credit card, you're borrowing money from the bank. The bank pays for your purchases, and then you have to pay the bank back later.
Right, and if you don't pay back all the money you borrowed, the bank charges you interest, extra money as a fee.
Yes, and that interest can be quite expensive. Credit cards usually have something called a minimum payment. That's the smallest amount you must pay each month.
But even if you pay the minimum, if you don't pay the full amount, you'll still pay interest on what's left.
Exactly. So the best strategy is to pay your full credit card bill every month if possible. That way, you don't pay any interest.
Now, you might wonder, why would anyone want a credit card if debit is simpler? Well, in Canada, building credit history is really important.
Oh, absolutely. Credit history shows banks and landlords that you're responsible with money. If you want to rent an apartment, buy a car, or get a mortgage to buy a house, they'll check your credit history.
Right, so using a credit card responsibly, paying your bill on time and in full, actually helps you build good credit history.
Perfect explanation. But when you're new to Canada, getting your first credit card can be tricky because you don't have credit history yet.
It's like a catch-22, isn't it? You need credit history to get credit, but you need credit to build credit history.
Exactly. But don't worry, there are special credit cards for newcomers, or secured credit cards where you put down a deposit first.
And this is where choosing the right type of bank can make a difference, right? We mentioned that credit unions are often more willing to work with people who don't have established credit history.
Absolutely. Credit unions might be more flexible, and some of the big banks have special newcomer programs that include easier access to a first credit card.
Great point. Now, let's talk about something that surprises a lot of newcomers: banking fees. What should people expect?
Oh yes, this is important. Most checking accounts in Canada have a monthly fee. At the big banks, this might be $15 to $20 per month. At credit unions, maybe $10 to $12. At online banks, often zero.
This might seem strange if you come from a country where banking is free.
Right, but that monthly fee usually includes a certain number of transactions, like debit purchases, ATM withdrawals, or online transfers.
Exactly. And if you go over that number, you might pay extra fees. So it's good to ask, how many transactions are included in my monthly fee?
That's a perfect question to ask. What about ATM fees?
If you use your bank's ATMs, it's usually free or included in your monthly fee. But if you use a different bank's ATM, you might pay a fee, usually around $3.
$3 might not sound like much, but it can add up quickly if you do it often. That's why I always recommend finding out where your bank's ATMs are located near your home and work.
Great advice. Now let's talk about online banking and e-transfers. These are really important in Canadian banking culture.
Oh, absolutely. Online banking means you can check your account, pay bills, and transfer money using your computer or phone app. It's incredibly convenient.
And e-transfers, that's electronic transfers, are like sending money by email. If you need to pay your friend back for dinner, you can send them money instantly through your banking app.
Yes, you just need their email address. E-transfers usually cost about $1.50 each, but they're so convenient. Much better than carrying cash everywhere.
Speaking of cash, let's talk about Canadian payment culture. It's quite different from many other countries.
Oh yes, Canadians use cards much more than cash. Even for small purchases like a coffee, most people use their debit or credit card.
And tapping is everywhere. You know, contactless payments where you just touch your card to the machine.
Right. For purchases under a certain amount, usually $100, you can just tap your card. No PIN required. Super convenient.
You can also tap your phone if you have Apple Pay or Google Pay set up. Many Canadians rarely carry cash anymore.
That's so true. But I still recommend keeping a little cash for emergencies or for small businesses that might prefer cash.
Good point. Now, what about automatic payments? This is something that's really common in Canada.
Oh, yes. Automatic payments or pre-authorized payments are when companies take money directly from your account each month, like for your phone bill, internet, or rent.
It's convenient because you never forget to pay your bills, but you need to make sure you always have enough money in your account.
Exactly. If you don't have enough money, the bank might charge you an insufficient funds fee or NSF fee. That's usually around $45.
Ouch, that's expensive. So it's important to keep track of your account balance.
Definitely. And that's where online banking is so helpful. You can check your balance anytime on your phone.
Now, let's talk about credit scores. Ethan, can you explain what a credit score is and why it's so important in Canada?
Sure. A credit score is a number, usually between 300 and 900, that shows how good you are at managing credit and debt. Higher numbers are better.
And landlords, car dealers, even some employers might check your credit score to see if you're financially responsible.
Right. A good credit score can help you get approved for apartments, car loans, or mortgages. And you might get better interest rates too.
This might be different from your home country, where maybe credit scores aren't as important, but in Canada, they're really significant.
Absolutely. And here's something interesting. In some countries, people avoid debt completely. But in Canada, having no credit history can actually hurt you.
That's such a good point. It's counterintuitive, right? You need to borrow money responsibly to prove you can borrow money responsibly.
Exactly. That's why that first credit card is so important, even if you just use it for small purchases and pay it off immediately.
Before we wrap up, let's talk about what to expect culturally when you visit a Canadian bank. The experience might be different from banking in your home country.
Great point. Canadian bank staff are generally very friendly and patient. Don't be shy about asking questions. They expect new customers to need explanations.
And if English isn't your first language, speak slowly and clearly. Most bank staff are used to working with newcomers and will be patient with you.
Also, don't be surprised if the process takes longer than you expect. Canadian banks take security very seriously, so there's often paperwork to fill out.
And here's a tip. Many banks have special programs for newcomers to Canada. These might include no-fee banking for the first year or help getting your first credit card.
That's excellent advice. Always ask, do you have any special programs for newcomers to Canada? It could save you money.
And remember what we said about the different types of banks? If the first bank you visit doesn't feel right, you can always try a different type. Maybe a credit union if you started with a big bank, or vice versa.
Great point. Don't feel like you have to stick with the first bank you choose forever. You can always switch later when you understand the system better.
All right, everyone, let's do a quick recap of the key vocabulary and concepts we covered today. We started with the basics, checking accounts for your everyday needs and savings accounts for money you want to save.
We talked about the three main types of banks in Canada. The big four banks like TD, RBC, BMO, and CIBC for maximum convenience and branches everywhere.
Credit unions like Vancity or Desjardins for lower fees and more personal service, but with fewer locations.
And online-only banks like EQ Bank or Neobank for no monthly fees and higher interest, but no physical branches.
We covered debit cards, using your own money, and credit cards, borrowing money from the bank that you pay back later.
Don't forget about interest. That's extra money you either earn on savings or pay when you borrow money. And credit scores, those important numbers that show how responsible you are with credit.
We also talked about online banking, e-transfers, automatic payments, and how different Canadian payment culture is, with all that card tapping instead of cash.
Remember, walking into a Canadian bank doesn't have to be scary. The staff are there to help you, and now you know the vocabulary you need to ask good questions.
Absolutely. You've got this. Take your documents, research which type of bank might work best for your needs, and don't be afraid to ask them to explain anything you don't understand.
And remember, building that credit history starts early, so consider getting a credit card even if you don't think you need one right away. Your future self will thank you when you need to rent an apartment or buy a car.
That's all for today's episode of English Speak. Thank you so much for listening. We hope this helps you feel more confident about choosing a bank and opening your first account in Canada.
Thanks for joining us. Next week, we'll be talking about finding a family doctor in Canada, another important topic for newcomers. Until then, keep practicing your English and we'll see you next time.
Bye, everyone!